Another quiet session on D Street with the benchmark trading at the 25,500 mark and broader indices also moving in tandem as the VIX surges. All major sectors are in the negative territory with IT and realty leading the losses.
HDFC Bank delivered a steady Q3 with double-digit profit growth, improving asset quality and encouraging credit momentum. Even as it absorbed a one-off labour code impact, ICICI Bank also posted healthy profit growth with stable margins and improving NPAs, though management commentary remained cautious on near-term growth and provisioning trends.
Reliance Industries delivered an inline Q3 even as EBITDA margin softened slightly. Retail-led growth with 8% jump in the revenue despite margin pressure, while O2C and digital services posted steady gains at Reliance Jio. ARPU inched higher and subscriber addition remained strong.
Wipro missed expectations on profit and margins, weighed down by higher employee cost and a one-time labour code impact, and guided for muted growth in Q4. Tech Mahindra, meanwhile, posted modest revenue growth with stronger margins and robust deal wins. Management commentary highlighted uneven demand.
Hello and welcome. You tune in to Buy Now, Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered by our experts. But before we get started with the show, let's take stock of how the market is shaping up at this juncture. A weekday of trade coming in at the start of the week. Now, remember, we had a weak global handover as well. Now, it is on the back of the comments by US President Donald Trump on imposing tariffs on countries that oppose the takeover of Greenland. On the back of that, we did see US markets fall, and we do have Indian markets also that are seeing a ripple effect of that. We do have a Nifty that's down 0.5%, 25,547 is where Nifty is perched at. We are just hovering around the day's lowest point as of now as far as Nifty is concerned. Nifty Bank also is trading with cuts of almost 0.5% in the trading session. It did manage a bit of a recovery of almost 95 odd points, but nonetheless, we're still trading with cuts of 0.5% or thereabouts. As far as the broader markets are concerned, we have a mid cap that's trading down 0.2%, but small caps is down 0.4%. So for now, the frontline index is really taking the knock on the chin. As far as India VIX is concerned, that is also very volatile. That is spiked up 5% as we speak. 11.96 is where India VIX stands at, signaling towards the volatility in the market. Advanced decline day ratio clearly tilted in the favor of declines right now. Sectorally, it's only the FMCG pack and the metal pack that is holding out in the green. FMCG is trading with gains of 0.2%, whereas Nifty Metal is another pack that is still holding out in the green with gains of 0.2% thereabouts. Now remember, as far as metals are concerned, we have gold and silver that have been hitting a record high on the back of the rising geopolitical tensions. So those are the safe havens, and therefore we do see the metals that are doing well. Hindustan Zinc, that is up in about 2.7%. Hindalco, that's up 1%. Hindustan, Indian Aluminium, Jindal Steel, all of them trading with gains of 0.5%. Nifty Realty is the biggest loser today, trading with gains of 1.5% in trade. Besides that, we have a couple of gainers and losers on the back of their earnings. We have Tech-M that's up 3% on the back of strong Q3 earnings. ICICI Bank, though, is on the back foot today. That's down 3% on the back of weak Q3 results. And besides that, we do have a couple of other stocks on the back of weak earnings. We do have Wipro that's down 7.5%. There's Geojit Financial Services that's down 2.5%. Soba that's down 3.5%. And ICICI Bank, like I mentioned, is trading with cuts of 3% on the back of Q3 results. We also have Polycab that's up 2%. We have Poonawalla FinCorp that's up 4% on the back of good set of results. Besides Tech-M, that is also trading with gains of 3%. And we have NetWeb that has zoomed over 10% on the back of strong Q3 results. So that's how the market is shaping up. Very stock-specific moves coming in on the back of earnings. But the rest of the market, Kavita, seems to be on the back foot because of a negative global handover.
Absolutely. And a lot of stock-specific action also going on in the market. But then what's right for you? For that, all you have to do is just send across your questions if at all you have any. We'll just flash our WhatsApp number and Buy Now, Sell Now now. For next 1 hour, we'll be taking your questions. So WhatsApp us your queries on that number 8657974571, and also write on the stock's name, the price at which you've bought it, and for time horizon you want to hold on to that particular account, and we will help you strategize your particular buy in the counter. So let's move on. And we're also joined by Jigar Patel, Gaurang Shah, experts for the day, and let's help you strategize during this market volatility. Hi, morning, welcome both of you. And Jigar, let's take a tech check, because yes, it's not a great start of the week, but then any green shoots or any hopes, areas where we can hope for something stock specific maybe.
First of all, good morning to everyone. Overall, the Nifty has again trading in a tight range of 26,000 till 25,500. So for today, specifically for today's session, what we are expecting is what happened last Monday. Exactly the history is repeating. Again, we are down by almost 150 plus point, but overall the support is expected near 25,100, which is close to 100-day exponential, daily exponential moving average, and we are expecting a sharp recovery in the second half, and almost we have recovered 60 to 70 point as well as of now. So overall, the market will remain in a range of 26,000 till 25,500 for next 2-3 days. So overall, the structure is looking a kind of reversal is seen on hourly chart. So we are expecting a buy call from here, and the stop loss will be below 25,400 zone, and overall the bounce is expected till 25,850, 25,900 in Nifty. And overall, if we look at the Bank Nifty is looking quite strong compared to the Nifty, because currently Bank Nifty is holding 9-day exponential average. And overall, again, today also we took exactly the same support of 9-day exponential average, and currently we are trying to recover. And based on hourly and half hourly chart, we are expecting a sharp rebound in Bank Nifty as well. So we recommend a buy at this level, keeping a stop loss of below 59,500, and overall bounce is expected till 60,100 and 60,200.
All right, so those are the levels to watch out for as far as Nifty and Nifty Bank is concerned. Thank you for that. But let's move on and get the show started with our first caller who's calling us now, Lalita from Bengaluru. Hi, Lalita. Good morning. Thank you for calling us.
Hello,
and tell
madam.
us.
Good morning. Good morning, madam.
Lalita, tell us what's your question.
I bought Emphasis shares, 15 shares, at the price of 2,790 rupees per share. Now I am sitting on a profit of 2,000 rupees. My next horizon is 6 months to hold. Kindly suggest me, shall I hold or sell, madam?
All right, Lalita, Jigar, I'll come to you for this. She is already sitting at a profit. She's bought the stock at 2,790 levels. Her holding period is next 6 months. Do you think she should now book her profits, or she can wait a little longer for 6 months to perhaps, there is more upside to the stock?
Definitely on Emphasis, there is definitely a lot of upside is expected in next 3 to 4 months. So I would recommend hold as of now based on technical chart. But overall, which are the crucial levels as of now is 3,000 levels. If Emphasis is closing above 3,000 levels, then I would recommend to add at that particular level and wait for a target of 3,300 within next 5 to 6 months. And overall, a stop loss can be placed below 2,800 on daily closing basis.
2,800 on daily closing basis. But that's it. Gaurang, do you have any view?
Hi, Kavita. Morning. A small disclosure before we go any further with the recommendations, that all recommendations that I'll be sharing this morning on your show, Kavita, are a part of our fundamental research team long-term recommendations. Our company, Jujit, or myself, we do not have any kind of investments in the recommendations that be given by. No financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So, not for 6 months, because Lalita was asking about 6 months, but if she has time by her side and she's got a longish kind of a time horizon, then the way the earning season is panning out, Kavita, not only for the third quarter, but whatever we have seen for the second quarter, what we'll see for the third quarter, and what we are likely to see for the fourth and the next financial year. We at Geojit Investment believe that possibly the difficult times is in the rearview mirror for the IT sector. Any resolution on the global front between India and US could open up a lot more opportunities, and more importantly, whatever numbers we've seen in terms of IT numbers, Kavita, the deal pipeline is very strong. That is one thing that is clear. Second thing that is clear is the aspiration and the ambitions and the acquisitions with respect to AI, most of the companies are doing. So not for 6 months, but for long term. Hold on. She's got 15 shares. If you get dips or lower levels, you can definitely add to it in case if she's got a investable amount from a long term point of view.
All right, Lalita, I hope your question was answered here. Thank you so much for joining us and asking your question. But let's move on to the next question that's coming in. This is coming in from Murli, who's writing in from Andhra Pradesh. Murli has bought L&T Finance today at a buying price of 293 rupees. Wants to know the fundamental and the tech view for the next 6-month holding period. Okay, so on the technicals, Jigar, let me come to you first. For L&T Finance, so what do you see on the charts? What are the levels to watch out for?
L&T Finance, again, there has been a massive sell-off from 330 till almost 280 zone, but overall a bounce is expected till 300, 310 within next 1 to 2 weeks or so. But I would recommend profit booking at higher levels because we already had a tremendous rally right from 140 till 330 odd zone. So as of now, I'm not expecting any bigger move in L&T Finance. So profit booking would be the recommendation and avoid fresh buying at current levels.
All right, so that's the recommendation on L&T Finance. But then let's move on. And the stage is well and truly set for the World Economic Forum, and Maharashtra returns to Davos with a sharpened vision. Now, to stake its claim as Asia's industrial and technology hub, here's what Maharashtra will have its eyes on.
Maharashtra recorded headline MOUs worth 15.7 lakh crore rupees at World Economic Forum 2025, and the implementation is well and truly on track. The state says 75% of those MOUs from last year have been implemented. Looking forward, Maharashtra's vision for Davos 2026 is simple: to make Maharashtra a key global hub in Asia for semiconductors, data infrastructure, AI, and green manufacturing. Now that vision is backed by 12 sectoral policies that the state government rolled out: industrial, electronics, AI, bamboo, leather, AVGC, and more. Maharashtra is also pitching scale. World-class industrial parks, 300 plus MIDC estates, and an expanding land bank to host large clusters.
जो अपना इस साल का वर्ल्ड इकोनॉमिक फोरम है उसमें भी हम ज़्यादा से ज़्यादा एमओयू करेंगे और हमारे यहाँ महाराष्ट्र में आने के बाद जो जो फैसिलिटीज़ है वो हम इंडस्ट्रियलिस्ट को देना चाहते हैं और इसके लिए हम 12 पॉलिसीज़ हमने बनाई हैं। उसमें इंडस्ट्रियल पॉलिसी है, इलेक्ट्रॉनिक्स पॉलिसी है, लेदर पॉलिसी है, बम्बू पॉलिसी है, एआई पॉलिसी है, मीडिया पॉलिसी है, वीडियो गेमिंग पॉलिसी है। ऐसे अच्छे हमने पॉलिसीज़ बनाई है और इस पॉलिसी में हम यहाँ इन्वेस्टमेंट लाना चाहते हैं और हमारा संकल्प है कि हमारा ड्रीम है कि आगे जाके एशिया का सबसे बड़ा ग्लोबल हब महाराष्ट्र बने।
World Economic Forum 2026 is all set to be Maharashtra's watershed moment to convert policy and promise into factories, data hubs, and green projects. Stay tuned to Times Network for extensive coverage from the ground.
Wait and watch out for more of Davos on ET Now as well. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll keep getting your questions answered. Stay tuned.
Motorola.
Welcome back. You're watching Buy Now, Sell Now, and it's time for a bumper debut. That's right, bumper debut of Bharat Coking Coal, and it lists at almost 96% premium. But then let's get on the management on board now, and let's assess BCCL's growth roadmap and also their budget expectation. And also we have our experts, and from them we'll also try to know the value unlocking for Coal India. Hi, welcome all of you. We are joined by Manoj Kumar Agrawal, CMD, Bharat Coking Coal, Mukesh Agrawal, Director Finance, Coal India, Sanjay Kumar Singh, Director Technical, Bharat Coking Coal. Welcome, good morning. And let me just come to you, Mr. Mukesh, first, because the IPO was entirely an OFS with proceeds going to the parent company. Given this, how will BCCL fund its ambitious growth and modernization plans?
Actually, as you said, that it was a OFS for 10% and the proceeds will go to the Coal India. But BCCL, if you see, the projected profit is more than 2,000 crore rupees every year from 2026-27. And in addition to this, there is a depreciation amount of around 400 to 500. So in nutshell, there will be around 2,500 crore rupees cash available to the BCCL. Whereas as per the projection, the capex requirement is only 1,000 crore rupees for the next 5 years. Every year 1,000 crore is required. So BCCL is able to do its growth program through its earnings from the every year.
Right. Also, talk to us about your budget wish list. We have the budget that's coming out on the 1st of February. What are you expecting to hear from the union budget in the next few days?
In the budget, we are expecting that already the long pending issue related to GST has already been addressed in the September 2025. So I think that the provision will continue and that will be helpful to the coal industry.
All
in
right.
addition to that, we wish to see in the budget there is some boost for steel sector, who all are our prime customer, and boost to steel sector will directly impact the coking coal sector, and it will fuel the demand. So we are hopeful that the steel sector will get something good, and in turn we will get something good.
Absolutely. But then, over 80% of revenue comes from top 10 customers. What steps are being taken to diversify the customer base?
You have to understand our BCCL company is a prime producer of coking coal. We produce around 58.5% of coking coal. And we are also diversifying our industry like CBM and in other ways. Our production presently is 40.5 million tonne. It will go up to the 56 million tonne in 29-30. And our strength is coking coal and washery. We are mainly attached vast coal, which is a prime requirement of the steel industry. We are producing coal, diversifying our business to solar plant also, and also in CBM, one Munedi plant of CBM, coal bed methane, is in very advanced stage and around after 1.5 years, professionally methane gas will be produced. So our top 10 customer and other customer will also come.
If you see right now, our customer base, the customer base is mainly PSU. For power sector as well as for steel sector, we are primarily servicing SAIL, Steel Authority of India Limited. If you see our projection for next 5 years, we are almost 5-fold to 6-fold increasing our coking coal production. This will lead to fulfill the complete appetite of Steel Authority, and then we will go to the open market, to the private player of steel industry, and through auction route we will offer coal to them. And we believe with the boost in steel industry, our product will be sourced by the private players also, as we are very competitive, as well as the customer will save on logistics cost also.
Right. So the company also plans to increase its coal washing capacity. How much of a margin improvement do you anticipate from producing a higher grade washed coal, and what is the timeline for this?
So, if you see the BCCL plan for next 5 years, we have a very ambitious plan towards washery. We are almost doubling our capacity from current level of 13 and 13.6 million ton capacity. So, if you process 1 ton of coal to a washery and sell all its product like washed coal to steel sector, washed power coal to power sector, and the third product also to power sector, the combined revenue generated by these products will be, and the net realization after selling of these products will be almost 3 times that we got by selling of raw coal. So for in next 5 years, the 16 million ton coal will go to washery for processing, and the net realization, we have a plan, and we believe that we will get about 3x realization, 3x net realization from these products in coming 5 years.
You can understand in the simple way, our profit will be around 1200 to 1500 per ton if we are washing every ton of coal.
All right, let's just also talk about the EBITDA. Now, in H1 FY26, there was significant decline in EBITDA year on year. Just to help us understand, how is the company addressing this, and what are the primary drivers behind this contraction?
So if you see, this is a very exceptional year where the region where we operate faced a very huge rainfall. So this year, the rainfall was highest in last 50 years to the tune of 2200 mm, whereas Dhanbad generally witnessed a rainfall of 1100 to 1200 mm. So this rainfall is badly impacted our open cast operations. At the same time, this year the season was such that the scorching heat was not there in the country. So the coal demand which we expect during the summer season, this time that was not picked. So these two are the primary reason for the low output and low offtake, and we believe that from next year such exception will not be there, and we will follow the general trend, as well as the boost in the steel sector will fuel up our output and offtake. So we are planning accordingly.
In addition to this, mining industry is the industry where fixed cost is 70% and around 30% is the variable cost.
Okay. So parent company Coal India is also planning IPOs for other large subsidiaries like MCL and SECL. How will the listing of these entities impact the resource allocation within Coal India Group, and how is that likely to pan out?
You had very rightly said that the Coal India has planned for listing of subsidiaries. In that first decision we had taken for the BCCL and the CMPDI. CMPDI is our consulting company. For that we had already filed the DHRP. The reason for filing these two DHRP was that these two companies are a separate nature, other 6 companies are a different. All those companies are the coking coal, non-coking coal, whereas this is the coking coal and the consulting. So their proper intrinsic value was not reflecting into the value of the Coal India share. Now with the listing of these two entities, their value will be properly underlined in the market, and the shareholder will get the benefit. Regarding the listing of the other subsidiaries, we had taken a decision because what happens in sometimes some companies perform exceptionally high and some companies could not perform. So because of the underperformance of one company, the performance of the other companies are subdued. To avoid that and to get a proper reflection of the results, it has been decided some portion of each company should be get listed so that the shareholder will get proper value of the companies.
Very well explained. Thank you so much, all three of you, for taking time out and speaking to ET Now today. Thank you so much. But then let's move on and...
It's a bumper debut for Coal India's arm Bharat Coking Coal, which listed at a 95% premium. Remember, it saw healthy demand for its issue, which was subscribed nearly 147 times on the final day of bidding.
Shobha is under pressure after Q3 revenue and profits missed estimates with margins weighed down despite a strong booking growth. RBL Bank is also under severe pressure despite earnings rebound driven by higher margins and low NPAs as credit cost edge up.
Tata Motors is under pressure after Trump proposed fresh tariffs on exports from the UK and parts of Europe, which could impact JLR's since North America accounts for 23% of JLR's wholesales, with nearly 70% of vehicles sourced from the UK.
Welcome back. You're watching Buy Now, Sell Now, and we're answering your stock-specific queries live. Just in case you haven't yet noted down our WhatsApp number, let's quickly flash that on your screen so that you can send across your questions. Write down the name of your stock, the price at which you've bought it, and the timeline for which you want to hold a particular counter. We have our live experts who will be answering all of your queries. Jigar Patel, Gaurang Shah, both giving you technical and fundamental solutions on your stock purchase today. But then let's move on and let's take a question on Tata Chemicals, and this is by our viewer who's bought this almost 2 years back. 980 is the price at which he's holding this. Hari Prasad's ready. I think it's a long-term purchase, Gaurang, so I'll come to you. Okay, advice for hold or sell?
For long term, we definitely have an accumulate call on Tata Chemicals by our research fund, long-term research fundamental team. A lot has happened in terms of expectation in the past and the reality that stands in front of us for the chemicals, especially Kavita, the specialty in agrochemicals. There was a view that China plus one, Europe plus one will give boost to Indian chemical companies to increase their footprints and business in the overseas market. But somehow that really did not take off as expected. But now the ground level indicators suggest that going into the future, there is going to be a large scope for domestic agrochemicals and specialty chemicals manufacturing companies to increase the footprint. From a long-term point of view, hold on to it. If you have gotten at an elevated level, then use these corrections to add to it in case if you have investable amount from a long-term point of view.
All right, so that's the word coming in for Tata Chemicals. Let's move on to the next question. That's coming in from, this one's coming in from, okay, there's no name over here. Let's move on to the next one. This is Aarti who was writing in. Aarti says she wants your advice on a couple of stocks. She wants to know about, Gravita, PG Electroplast and Yatharth Hospital. I believe she's not given a holding period. Coming to you, Gaurang, again, what would be your view on Gravita, PG Electroplast and Yatharth Hospitals for the next 1 year?
Well, so firstly on PG Electroplast, out of the three, we have a positive coverage from a long-term point of view. Continue to hold on to it. Companies into basically consumer durables and EMS segment. As we all know, EMS segment went through a little bit of choppy and volatile time because of certain issues related to the to few companies in this particular sector. Some bit of profit margins concern by companies like Keynes, etc. But these are all short to medium term concerns. From a long term point of view, we have a positive coverage on PG Electroplast. Hold on to it. If you got in at higher levels, you can average at current levels. On the other two companies, unfortunately, we don't have a coverage, so I won't be in a position to give you specific buy sell or hold.
All right, but then let's also take a tech check because Aarti is asking about a couple of stocks. You know, she's in almost 10 to 30% loss. So a tech check on all of these counters. Jigar, I'll come to you. Gravita India, PG Electroplast, Yatharth Hospital and KPIT.
See, first of all, in Gravita, again, there has been a tremendous selling seen from 1900 levels and currently plays near 1575. So there has been a massive selling from the top, and currently we are expecting a consolidation in the zone of 1500 till 1600. So I would recommend buying at the lower levels around 1550 or 1560 approximate level in Gravita, and we may expect a bounce back till 1900 and 1950 by next 3 to 4 months. In terms of Yatharth, the kind of, again, the correction has been in the same mode, just like Gravita, but overall, the good thing about Yatharth is that the rally which we saw from Feb 2025 till October 2025, so exactly we are near the correction levels of 50% retracement. So I would suggest in Yatharth that it can be bought at lower levels around 600 to between 600, 580 and keep a stop loss of below 550. And once again, we may see a rebound till 700, 750 levels. In KPIT tech, again, the kind of structure is seen is, almost sideways again from 1300 till 1200 odd zone, but overall consolidation is seen at lower levels. So I would recommend buying on dip or even a staggered manner can be done from 1175 till 1150 on KPIT tech, keeping a stop loss of below 1100, and overall bounce or reversal can be seen till 1300, 1350 within next 3 to 4 months.
All right, so that's the tech check on these counters. Let's move on to the next question that's coming in from Ignatius. It says he has 10 stocks of Bajaj Auto that he's bought at a buying price of 9,003. Can he hold it for long term, 2 years, and what levels can he add more? Gaurang, let me come to you first. For Bajaj Auto, he's bought it at 9,000. Firstly, should he be holding on to it? And for the next 2 years, what should he do with Bajaj Auto?
So our sense at Geojit Investment is that the auto sector is likely to perform well on all the boxes. We've seen the month-on-month numbers. We've seen the kind of launches, even in months of November and December for the year gone by 2025. We've seen launches happening. So a lot of excitement. And of course, you have a PLI scheme from the government, which is likely to even add to the positivities. Export market numbers month on month looks extremely robust, and that possibility of improving the number as we go into the future. First of all, hold on to Bajaj Auto. If you get dips possibly at a lower level than your earlier acquisition price, and if you have the investable amount, I would definitely advise to add also. Don't average in small gaps. You should have at least large gaps, maybe about 4-5% or more compared to the earlier acquisition price. What happens is people tend to average on small gaps. So that's not a meaningful average. So unless you get 5% plus kind of correction from your earlier acquisition price, you should not average. You should average when you get that kind of dip and do it systematically in a phased out manner, but definitely hold on at.
Bajaj Auto, in fact, you can add more. But then this is a question coming in from Murli from Andhra Pradesh. This is a technical and a fundamental question for both of you experts. Jigar, I'll come to you first because MRPL is the name of his stock that he's bought. But then he wants a view, technically 6 months, and for long term of Gaurang's view. But then let's start with short term.
On MRPL, again, there has been a significant correction. If we look back into 2024 and since last 6 to 4 months, there has been a consolidation followed by a breakout. But currently, again, it is placed near a 200 period exponential average on weekly chart, which are lucrative levels at current juncture. So I would recommend a buy in MRPL in a staggered manner from 150 till 135 zone for a view of at least 1 year. And overall, the stop loss can be placed below 120, and overall target would be seen around 210, 220 for next 1 to 2 years.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll keep getting your questions answered on the other side. Stay tuned. Welcome back. You tune into Buy Now Sell Now, where we are getting your stock-specific question answers. The number is flashing on top of the screen. Keep sending in your questions and we'll get them answered by our expert. So without further ado, let's resume with all your questions that you've been sending us. This one's coming from Sushila. She writes in about Adani Power. She's bought 155 shares at a buying price of 5,380 rupees. She wants to know the targets for it. Jigar, let me come to you for the target for Adani Power. She has bought it at 5,380 rupees. Clearly, she's sitting at a huge loss. What should she do right now?
Currently on Adani Power, there has been a continuous consolidation seen on 200-day exponential average. And currently, the kind of structure we are seeing, it's very at critical levels, and critical support is expected near 140. So I would suggest her to keep a stop loss of 140 on weekly closing basis. If it is closing below 140, then there will be a huge downside till 130 or even maybe 125. And overall fresh upside will be only seen above 145 weekly closing basis. So as of now, keep holding and keep a stop loss of 140 on daily closing basis.
Stop loss to be considered as far as Adani Power is concerned. But then Coal India, this is Khurshid from Delhi. And is it a right time to buy this counter at current level, or you should wait for a dip? In case if it's a medium-term outlook, Gaurang, what would you recommend?
So before commenting on Coal India, Kavita, just one clarification on the earlier question, Adani Power. There was a split in the month of September last year from 10 to 2. So it's not the loss. I think the investor has to adjust. She would have got the equivalent quantity and it wouldn't be that kind of a loss. So, investors, my humble request to all the investors is that whenever there is a corporate development about split or bonuses, please keep that in your record so that you get a clear picture. If you will take the earlier acquisition price without split and bonuses taken into consideration in terms of your number of shares increase, then you will tend to get a wrong picture. So that was just a clarification. On Coal India, Kavita, again, on bragged off of this Bharat Coking Coal IPO, there was a huge tailwind positivities in terms of the upside that we've seen for Coal India. I was listening into Coal India's management along with the Bharat Coking Coal management and the kind of business outlook going forward from here on. We have a positive coverage on Coal India. Don't put all your money at these levels because now with the tailwind disappearing with respect to the listing of Bharat Coking Coal, we should see a little bit of retracement in the counter of Coal India. Start at current levels and add on dips would be the strategy.
All right, Gaurang, thank you so much for giving us your view on Coal India. But quickly on, let's focus on Tata Motors. That is in focus after Trump proposed fresh tariffs on exports from the UK and parts of Europe. Now, potentially, that impacts the Jaguar Land Rover. Now, North America accounts for 23% of JLR wholesales, which with nearly 70% of vehicles being sourced from the UK, making US retail demand vulnerable if the tariffs rise. My colleague Shrishti Sharma is joining us with the details of how is this likely to impact JLR sales. Over to you, Shrishti.
Well, yes, Tata Motors passenger vehicle division's JLR is yet again in focus on the back of a negative news flow and concerns regarding the fresh tariff implementation, because as we know that Donald Trump is threatening to impose fresh tariffs on not just on UK but several European countries as well, wherein he's saying that in a note that he has already said that from 1st of February, Denmark, Norway, Sweden, France, Germany, United Kingdom and even Netherlands and Finland will be charged a 10% tariff, and from 1st of June onwards this tariff rate will get hiked to 25%. Along with that, the tariff will be due and payable until such a time and a deal is completed in order to purchase the Greenland. We are well aware of this particular news, but that is indeed negative for Tata Motors passenger vehicle division because that might impact their North America sales, because as we know that the North America sales were anywhere under pressure, and as per Nuvama note, they are highlighting that as per the latest Q3 FY26 JLR sales update, North America contributed 23% on their overall wholesales data, and from that 23%, 70% of the sales or the production was rather from their UK facility and 30% was actually from Slovakia facility. Therein, we did not hear the name of Slovakia. That is indeed a bit giving a bit of a relief, because key to note is that Defender models get exported from there, which are a high margin product for Tata Motors JLR division, and they are not likely to face any fresh tariffs. So that is a bit of a relief coming in. But yes, from the UK facility, 70% of the exports go to the catering to the US markets, and that of course is definitely concerning for Tata Motors JLR division. And Nuvama also notes that if the tariffs are implemented, they are likely to hit the US retails in the near term, and that's why this stock is also under pressure. Back to you.
Absolutely, we can see the impact as well. Thank you so much, Srishti, for all those details. But then from auto, let's move to pharma. Sun Pharma is evaluating the acquisition of US-based Organon in a deal that could become the largest cross-border takeover in Indian pharma. The proposed $10 billion transaction would give Sun Pharma entry into higher margin biosimilars and women's healthcare. Meryl, our colleague, joins in with all the details of the report. Meryl.
Well, yes, Sun Pharma is currently evaluating the acquisition of US-based Organon, and if successful, this will be the largest cross-border acquisition in the pharma space in India. But let's look at this a little more deeply. Now, the total quantum of the deal is around $10 billion, inclusive of debt. So, the acquisition target company, Organon, currently has a debt of $8.9 billion on its books as of the end of the second quarter in 2025. Now, Sun Pharma was previously also evaluating this deal, but the talks back then did not make any major headways because of their high valuations. And since then, now Sun Pharma has re-engaged in these talks after Organon's share has almost halved from its peak back in November 2024. And Sun Pharma, as we know, already has a proven track record of bringing about efficiencies in their acquired companies that face financial management issues. So if executed, this will be a very interesting transaction to watch ramp up for Sun Pharma, as it almost guarantees their entry into their higher margin segments such as biosimilars and also women healthcare products. The stock market is also factoring this in, with Sun Pharma being in the highlights of today's trade.
So Sun Pharma in focus today on the back of that news flow. Thank you so much, Meryl, for joining us with that. But let's get going and take the last question for the day. This one's coming from Shungam Kutti, who's writing in. He says, can I buy BHEL and BEL? He's not given us a buying horizon. But Gaurang, let me come to you for BHEL and BEL both. Now, both the shares, though fundamentally strong, do you find comfort in the valuations of these stocks? And say for the period of next 1 year, what do you see for BHEL and BEL?
Well, honestly, if you're getting into cap goods, engineering and defense space, 1 year is not enough. My request would be to have an little bit more extended time horizon. And especially for defense, I've always maintained on our channel 80 Now and 80 Now Swadesh that investors should have at least 3 to 5 year plus horizon, because it's a long gestation order execution process with respect to defense. For BHEL, there was this scare about last week, 10 days back, that Indian government is going to allow Chinese companies to get into power, capital goods engineering, etc. I think it was just a passing wind. It was not necessary to give the reaction, because we saw cap goods engineering stock correct. On the long-term side, we have coverage on both BHEL as well as BEL, but the time horizon has to be a little bit more extended.
All right, so that's the take coming in on BEL, and with that, it's time up on Buy Now, Sell Now. Thank you so much, both of you, for taking your time out and helping our viewers strategize their buys today. But then, time to sign off on Buy Now, Sell Now. But then, more interactions and stock-specific news coming up in Markets at Noon after this break.